Hi, this is Kim Watson. Welcome to my weekly outlook. Now, this week I am going to do a slightly a new version, a very new version. Basically, I'm going to run through the technicals. I have got some, we'll be looking at the sentiment and some economic data coming out, but it'll all go together at the very end. I've got a summary table which you can have a copy of. I'll talk about that later. But for now, I'm just going to run through the technicals, what we've got here with the majors, starting with the euro dollar as ever. And well, what have we got? Looking at this at the moment, it does tend to be, it does certainly look like it's possibly earning its way down. We have stayed in a relatively tight range for some time. It's starting to pitch off. It went further than expected, I guess, and it's got the possibility of coming down this week back to those lows the prior 2 weeks. Let's bring a daily, let's say past 2 weeks. It is the past 2 weeks. Friday's low and the previous week's low there. If it starts breaking down towards that area, well then obviously technically we could see some further downside. It's not necessarily going to be long-term downside, but we'll come on to that in a moment. But certainly from a weekly point of view, it looks weak, and could retest this trend. Well, I say retest it for the first time as a trend line. So it'll be interesting. We'll see if that runs through. If not, it may push on down towards that weekly 200. So the bigger picture does look technically consolidated, but with a weak edge. Let's have a look at the pound. Now this is breaking its weak edge here at the moment. It again has been consolidated. We've spent quite a few weeks here in a very tight range, but at the moment it's just sort of it looks like it wants to almost break out of that area. It may find a bit of support. Obviously Brexit situation could give it some support, but we've got this head and shoulder sort of pattern running through here, which has just broken the sort of neckline too, which could see it coming right down to its monthly S1 sort of area, if not more, if things continue as they are. So it's as I say, consolidated more so on the weekly, but looking like it's potentially going to break down further as well. So more weakness there. Dollar yen, this is the awkward one. Awkward mainly because well, if the pound isn't awkward, it's got its own risk, but it's technically it's working okay there. The dollar yen is the awkward one, as in 1 minute it's risk on, next minute is risk off, and the yen has been at the other end of that risk. Whenever the risk comes off and people running, you see money come to safety, and it's actually going to dollar yen. Every time we see a bit of a risk back on, markets start picking, equity markets picking up. Well, we're seeing risk off again, and the yen is pushing up, regardless of what the pound and the euro are doing. So at the moment, it put in a bearish pivot swing the previous week, did very little apart from trigger that, and then it's been sitting there, and it's just really bounced up at the moment, and it's sitting in this sort of range here. Now the question is, there is an expanding wedge. There's quite a lot of reasons to say, well, if it breaks that trend line, it becomes a bearish pairing. But for now, with this pitch up here, chances are it could push up further. But the risk, of course, is, and which would draw it down there, is if we saw a lot of risk coming into these markets, risk off rather, effectively, sorry, we could see a break of this trend line, as I say, and then a push down, maybe towards that 200 or even further. I did some analysis in the earlier part of the week, and I think with the head and shoulders or equal throws from this movement that it's doing here, it'd bring it down to roughly 108-ish. Right. That's a dollar yen. So as I say, there's not all clarity with the dollar yen. The Aussie dollar is a little bit more clearer. It remains weak in the bigger picture, still in a solid weekly downward trend. Certainly there's been some consolidation on a daily basis, which it's failed to properly move up above we even get it into the 34 at the moment, which is really a sign of weakness to me now. It's sort of the amount of time it's sitting here. Yes, you've got the consolidation phase, but perhaps it's just with those shooting stars that we've put in, maybe we have got some more downside unless there's some good news coming out from economic news in Australia. But for now, it really looks bearish there. Canadian dollar. Weekly picture, we're just knocking on the door, this upper trend line here at the moment. It's just this weekly upper trend line just knocking back on the door there. It's reacted to it last week. It sort of pitched into that sort of area on Friday and came straight back off it for a short while, but not massively. Now I've been talking about this because of the lower highs, lower lows that we've seen here. I mean, it has confirmed in the shorter time frame here, higher low, so there's potential for a push on through. And of course, Friday's low inflation data didn't help the situation either, so it is looking moderately weak. So that's that. And finally, I thought I'd look at the New Zealand dollar from a currency point of view. I've been talking about it for a long time. I put the sentiment, and as it's one of the sort of softer minor majors, I'll pop it in anyway. Had put a nice pivot swing, bullish pivot swing in there, closed off on it last week, but doesn't look like it's able to follow through on that at the moment. I've been talking about it a long time because of the negative sentiment, which was extreme basis, but it looks like it's pitched up as far as it really wants to go at the moment, and there is a very soft divergence on this daily picture now. So it does potentially look like, well, easy route, I guess, is if it does start breaking down on the low side of this, is well, it could be heading back down towards the previous lows, so looking soft. Okay, let's have a look at the technicals, the fundamentals here. Now I've just laid this out very simply. The currency interest rate, potential changes of that interest rate. Looked at the sentiment for you, just a very simple summary here with what the asset managers, pension funds are doing, and what the hedge funds are doing in terms of their positions, their holdings, and then key movers and advanced news, etc. So that's all sitting. I don't know why I said advanced news, but probably because I've read the word advance at the top there. So I'm going to click this through, and we'll pull it together now with what we've seen from the technicals there. So US dollar 2.25% interest rate, due still to go up. There's a 79% chance on the dot analysis, etc., and with the figures coming out, even taking into account Trump, that it may be increased in December. Even then, it will still be at 2.5. The upper rate would be at 2.5, which over the longer term is still quite modest. However, when you compare it with what's below, it leaves it as a slightly. Whoops! I'm trying to draw an upward bullish arrow there. There you go. It's the best I could do. So it's erring on the bullish side, which will, after doing the analysis we've just done, make sense in terms of what's there. Asset holdings are generally, asset and head sentiment, sorry, is pushing on the longer side for both of those. So they're not massive positions there. That's one thing I'd say. It's much more important the other side of those markets. But we have got a number of FOMC speakers, which I'll come on to in a moment in terms of a bit of timing for that. We've got the advanced GDP next Friday at on the 26th there. That'll be at 1:30, I would guess. So that's the sort of the main number for the week. It is a quiet week ahead. So looking at the euro 0% interest rate. We have got the ECB press conference on Thursday, so interest rate will be discussed. They're due to end the bond buying at December 2018. Now that is actually a negative figure, by the way, the base rate effectively, but reported as 0%. But bond buying is due to be, as I say, finished at the end of this year. Now it's what sort of slant they give there afterwards. There's this the Italian debt. The elephant in the room is sitting there, and of course Brexit. So there's plenty to weigh on that sort of what sort of decision they'll make. And of course we've got the PMI data out the day before on the Wednesday. So we've got the French, German PMI and the European PMI. But obviously the German and French figures are the sort of the key powerhouse for manufacturing services. So be watching that closely. That is a sort of figure to be watched. Now, in terms of the slower pension funds, they're still holding around about 66% long on their positioning. The hedge funds are getting more aggressive here, running to 81% short, effectively holding. So that the more aggressive, quicker moving funds are short, and it's starting to become in a biggish way. When you look back, it's a while since they've been quite as short as they are there. So of course that gives it's a double-edged one there, because whilst they're very bearish at the moment, which fits with a lot of the other pattern there, we could get closing rallies could come into that and push the euro up at some point. We often see the reverse sentiment, which we'll come on to in a moment. The pound, no expectations of any increase rates, and nothing to talk about there. There was last time a couple of voters were a bit more hawkish, so there's a little bit of sentiment regarding that. If you look at here, the short position for both asset funds and hedge funds, but not massively. I mean, the asset funds are probably a little bit more, but the hedge funds, relative to what the euro's doing, it's quite neutral. But erring on the bearish side there, and of course Brexit's holding it. I mean, we're 95% there allegedly, but it's that 5% is the big crunch now, which we obviously refers to the Northern Ireland border. So struggling there with the pound, and technically we're seeing it struggle. Dollar yen, well, there's a keen short bias there from in terms of sentiment, particularly on the more aggressive traders, the hedge traders. No sign of an interest rate increase or anything such mentioned, but to be fair, they're still waiting for this 2% interest rate, which inflation rate, which, as they're sitting at 1%, and it's probably been as high as it's been, they're going to be struggling. Risk flows is the big problem, as I've already mentioned here, because money will come back to the yen if there's risk is back off of everything else. Aussie dollar, no likely changes until 2019, and it really depends on anything that sort of changes that. For now, both asset and hedge funds are short, quite some build up of percentage shorts here, but it really just shows the trend that the market's in there, and they're pretty much both sticking to that, which is unusual for a lot of the hedge funds, but there we are. It's following the picture, so the strength is really to the downside. No significant news due out for the Aussie dollar this week. There are a couple of speakers first thing in the morning. Canadian dollar, we do have the central bank on the 24th reporting. Bit of a opposite direction here, long from asset managers, short from hedge funds, and technically it's looking soft as well, so it's sort of really goes for this more short-termism from hedge funds there, I guess. Next change is potentially this week, and it's really what happens there, and if it is change, which is expected to come in, it's built in there, an increase to 1.75. There's plenty of positive bits there, but it does look like it's slowing down, and it's whether or not they'll take into account the slowdown of some of the data. As I say, with inflation dropping off quite quickly on Friday, we saw that. Whether they'll take that into account, we'll see. But an important day for the Canadian dollar there on the 24th. Wednesday. Okay, and New Zealand dollar, well, no interest rate increases in the near term or anything to talk about. Short wise, it still remains extremely a real extreme, and in fact getting even more extreme figure in terms of the number of short positions against the New Zealand dollar. Now, this has given us a couple of periods of decent bounces, but technically it's still moving, it's still in a downward trend until we see a break. So in summary, the dollar looks like it's potentially got a bit of strength there, and may see a continuation of such. Euro dollar was flat to negative, and it's looking more and more negative. Cable's starting to look like it's going to break more and break possibly more negative there. And this all sort of fits together. with what's being shown in terms of sentiment, there's bigger money and everything else. That's not to say we can't have counter trades on an intraday basis. It just looks like it may be the safer way to be trading with more money. Yen, it's a bit, for me, it's a bit of a neutral. It's got the potential for trades in it, of course, but with the risk flows, it's a problem. It can be a problem because it can just switch back and not be correlated with anything else. Aussie dollar with no significant news, and the soft approach may be downside there. And Canadian dollar, we'll see after the central bank comes out there. So the central bank is key for both, as I said, the Canadian dollar there and the ECB. There is potential that come the 25th they may say something that is much more bullish, and we can get a kick off this, and we may start seeing things. But the last one was quite lame. I do wonder if we'll see some more lameness. Okay, so that's the overall view there. Technical, fundamental, speakers, there you go, there's the dates of the speakers. I shall leave that, I'm not running through them all, but all I should say is they're all voting members of the FOMC. Of course, Draghi's a voting member of the ECB, but they're voting members, and they are talking about the economy and monetary policy, and they can create volatility. For the others, in terms of timing, have a look at Forex Factory or your own news service just to clarify the timings. Have a great week. That's it for me. Bye for now.